Hi folks, this is Sean Hyman from Chart of the Day, and I want to talk to you today about some what I call tame currency crosses. There are several currency crosses out there that are fairly tame. This is one of them, Euro Swiss on the 4-hour chart. And you know, a lot of currency crosses actually are more volatile than the majors. In other words, pound yen, euro yen are typically more volatile than pound dollar and euro dollar. However, Euro Swiss has had some unique facets to it here lately. It's been in somewhat of a range. It's had a little bit of a slight tilt to it, but it's found a floor in here, and it's had a lot of its resistance right up in here. I call this a resistance zone, meaning that it could get stopped anywhere in here and reverse, and typically find support anywhere around in here where it's found a floor. Now, one thing that's unique about this Euro Swiss trade, and one reason why I call it more calm and a little bit more safe, and it's safe, you know, is definitely a relative term in the financial markets, because anytime you invest money in a financial market, there is some risk there. But if you could say it's safer than other pairs, because every time it trades down, you know, this is 150.75, anywhere between here and 150. The Swiss central bank has been coming in and shooting this thing higher, and a lot of the spikes that you see here and here, and there was some back that is almost off the chart, a central bank intervention, and that's why you'll see the currency spike so quickly in such a small amount of time. So within this 4-hour candle, I mean, you know, it zips from 150.75 up to 152.40ish or so. So I mean, just a couple hundred pips or so, just boom, really quick in one solid candle. Why does it happen? Swiss bank intervening. Now, why would the Swiss bank intervene? Because it's the euro to Swiss exchange rate is very crucial to their export-based portion of their economy. The exports in Switzerland are a crucial part of their economy. If you get an expensive Swiss franc to the euro in particular, because that's where the bulk of their exports go, actually not to America but to the rest of Europe, then all of a sudden the rest of Europe, as this goes down, as their euro waters down in relation to the Swiss franc as it strengthens, the goods that they export, watches and things of that sort that they're known for, all of a sudden look more expensive because their money doesn't go as far. But if you can weaken this Swiss franc, which by doing that, it's like a teeter-totter. If you're bringing this down, then you're automatically bringing euro up against it, and that's exactly what they need. They need a stronger euro to the Swiss franc, and by doing that, it takes it up on the chart. And so what they're doing is they're supporting it near the 150 to 150.75 level. And so just a couple of nights ago, I bought this pair down and around this area, and it's zipped up quite a bit. It took off all in one day. I was actually going to get a recommendation out to my Global Currency Cross subscribers on it, and before I could get the recommendation out on this particular one, it had already taken off and headed for the moon. So, but keep in mind, I mean, this pair will likely be back to this level because the market keeps trying to fight it. The market keeps wanting to take it down. The Swiss central bank wants to push it up. Honestly, the Swiss central bank has more firepower than the market generally does. They can sell francs and buy euros all day long. It's easy to go in the market and sell your home currency, and so I would rather be on the side of those deep pockets than the other retail traders out there. So this thing has found a lot of support in here. If you see it come down to these levels again, it could be a good solid range trade. Keep in mind you would have to have wider stops because yes, it is possible for it to slip through this and go to say 150 even or so. But also keep in mind, even if it were to slip those 75 pips, keep in mind that you've got from 150.75 up to it will eventually get back to 152.40ish or so. So your upside potential is even still greater than your downside risk, even if it did slip through this and head towards 150. And that's why I call it a safer trade in the market right now, because it's more of a calm trade. It's a little bit more of a predictable trade. It's got a good risk reward ratio when you're buying it towards the bottom here. So what you would not want to do, and the reason why I did not give the recommendation once I saw it run off while I was watching it, while I was writing things up in my service, is because once it starts getting up in this area to this area, it's lost its edge of being a good risk reward trade. So it loses a lot of its luster. But more than likely, it will be back to visit these levels again, and when it does, I want to be back in it. And those of you that are a part of the Global Currency Cross Trader Service, you'll be alerted, and I'll give literally exact entries, limits, stops, updates on the trade, etc. So you'll get every bit of those details. So that's the idea on the chart of the day. Thanks so much for attending.